Let's talk about gaps. How many people gap trade? How many people gap trade Forex? Hands go down. All right, it happens in equities a lot. Boom, you get these big gaps between the candles. Doesn't happen very often in Forex because we're open 24 hours a day. So it doesn't gap. If you see a gap on your chart other than Sunday afternoon, it's an error that your broker gives you. Don't trade it, all right, because you're the only one that sees it. Okay, so gaps happen over the weekend. Let me explain why. I'll use the previous example. Okay, the markets close on Friday. All the Forex platforms around the world are closed because the banks are closed, right? Everything's fine. And then suddenly the United States bombs Iran over the weekend. That's a big deal. All right, you didn't expect it, but it's a big deal. And people around the world are going to move their money around and protect their investments. I would guess the Japanese yen would skyrocket and the dollar would skyrocket. I'd be short every Japanese yen pair I could get my hands on. That's my guess, right? But the thing is, something happened because bias and price really is created by all known information. It's called an efficient market. Everything's priced in instantly. So if you had all weekend to stew about this, somebody's going to start moving their money around the second they can. And when the banks open, like in Auckland, New Zealand's the first one, when that opens, boom, it's really going to move. And price can move a couple hundred pips from where it closed. This is tricky because maybe a month and a half ago, I lost money because of a gap. I carried some trades over the weekend. I had like 50 pip stops on all of them, and the market gapped up 200 pips, never triggered my stop because the stop's only triggered when price hits the stop, but the price never hit the stop. It went from here to here, and I lost 800 pips. Just, I log in, I'm like, what was that? And I log in, and I'm like, minus 800 pips because I was on multiple trades. I'm like, yowza. Didn't calculate that into my risk management, right? So things can happen. It can be scary. That's unusual, but it can happen, okay? But on a minute scale, things do happen, and maybe you get a 50 pip gap. Now, these gaps, the idea of trading a gap, and it comes from the equities market where gaps happen a lot, and gap traders are, what is that, 5 or 15? Oy vey. All right, so what they've taught to fill the gap. In chemistry, nature abhors a vacuum. So as soon as you see this gap, the gap will get filled. That's the idea. And then go back to doing what it was doing. So again, it doesn't happen every weekend. It only happens on the weekends, right? But sometimes it does happen, and you might be able to take advantage of this idea that you see the gap, and maybe the gap will fill, and you could take advantage of that. And then once the gap is filled, maybe it'll continue doing what it was supposed to do. Sort of a dog and pony show type trade. I don't really like doing it, but often it's available. It's an opportunity. It's just a different type of trade. So I'm going to show you what happened Sunday, because that is the closest or the newest examples I could possibly give you. All right. So again, these are not perfect. It's just what happened at the open on Monday's trading session in Asia. Okay. The question was, in Forex, when gaps appear, do they always fill? There's no always. So all you can say is, I wonder if it's going to fill, and be ready for it to do it. So you wouldn't get stupid and just say, oh, look at the big gap, and like try to fill it and just drop a bunch of lots. No, but get ready for it to fill. And if it does, get involved because you're saying to yourself, oh, the gap is going to fill. And then once it fills, you should probably take your profit and then see what happens. All right, so don't be silly about it. Nothing has to always happen. But you can anticipate, hey, a gap, maybe it'll fill. And then do something. Okay? So again, not perfect examples. Most recent examples. This is the Asia session from Sunday, which is the Monday Asia Open. So here it would be, I don't know, we're looking at 5 or 6 or 7 o'clock California time. This is the Kiwi yen. You see the gap? This is Friday close. This is Monday close. Monday for the Kiwis, right? So here it'd be Sunday afternoon. You see the change in price? That's a pretty big gap. What is that? 20 pips or something? 20, not a lot, but something. And look what it did. Up, 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 filled the gap, boom. Went back doing to what it was doing Friday. Why? Because people made money on Friday shorting. They want to make money today shorting. They're just doing what they were doing. But the gap got filled. Okay? Here's Aussie yen. Same time, same place, bigger gap. It closed at 75.60, 75.70 on Friday, opened at 75.20. 50 pip gap. Gap filled, or almost exactly, right? Here's the close, here's the open, and then boom, went back doing what it was doing. Here's, oh, that's Kiwi again. Well, look, Euro yen. There we go. There's the Friday close. There's the gap. Gap got filled, went on doing its own business again. Okay? Just, it's not my favorite type of trading. It's not something I do every weekend. But you can look for it. If you see it, now you can say to yourself, I wonder if the gap's going to fill, and maybe help fill it. Or we'll let it fill, and then do a continuation of the previous day. But if you know, now you have the intelligence. And if you have the intelligence, you can make decisions. Okay? That's what I'm trying to share with you. Now, I only have 3 minutes, so let's get going on Trade the News. Trading the news is very important. News happens all the time. It's very important fundamentally. But what I'm going to show you here is how I scalp it. A scalp is a short-term trade. I usually get anywhere between 0 to 25, 30 pips. I'm not in it for very long. I enter on a 1 minute. I exit on a 1 minute. But this idea of like taking 4 or 5 pips out of the market is stupid in my humble opinion. So usually I'm trying to get a lot more because my trades are set up better, I think. But in this case, it is a quick trade. Okay? Now, if you had 20 times a week where you had an opportunity to news scalp, it can add up. It's a nice thing to have in your repertoire. So if you don't know what's going on fundamentally, you should skip past this. But if you understand the fundamentals and technicals, it's just another trade plan. So in Asia, the Aussie news moves really good. So we recently had a fantastic Aussie jobs report. Boom! I traded the Aussie dollar. It was fantastic. And then a couple hours after that, we had an amazing Chinese export data. Boom! Shot the market up. Fantastic. I carried it not through just Asia and London, but I carried it through New York because that's such a big thing, you know. So these big policy changes and big economic data can move the market. Okay. So and then of course the currencies, as I explained, the Asian currencies move very well. You should also pay attention to CAD and, as well. I know it's not an Asian currency, but it's a commodity currency. So if China has fantastic export news, what it means is they're going to need natural resources to buy a whole bunch of stuff from Canada, and they benefit. So, once in a while that CAD moves. All right, so here's what I do. Some news just came out. I don't guess what's going to happen before it happens. I let it happen. I don't say if the number is X, if this number is big, it's going to be bullish, or if it's bad, it's bearish. What I say is let the rest of the market figure it out. So the numbers come out, it's good Aussie dollar or Aussie job report, and if the market pushes it up, so be it, I'm a bull. I haven't decided ahead of time. I want the market to show me how they interpreted this new information. So if the Aussie job report created green candles, and these are 1 minute candles, then guess what? I'm bullish. Do I want to buy high or do I want to buy low? Buy low. So somewhere, price comes up, blows through all the weak resistance, finally hits a line in the sand, some sort of resistance that even the big surprise in the news couldn't break. It starts to come down. Now I get serious about maybe entering a trade. So I bust out my fibs. What Fibonacci zone do I like to buy at? 382 to 618, right? Real world comes out. Guess what? It did a 786. Uh-oh, not a perfect example. I'm not giving you a perfect example. This is a 786. I'm still bullish, but I'm cautious because it made a bigger pullback than I was expecting, okay? So it pulled back, made a 786, then found support. Never broke it, never broke it, never broke it. So boom, I drop a lot. Not enough time for a group hug, not enough time for a committee meeting. It held for 2.5 minutes. I'm going to drop a lot, put a stop on it. After maybe a minute or so, I should already be profitable, move my stop to break even, take the risk off the table. It's a short-term trade. All right? And then suddenly, Now we get back to that resistance. If it's truly bullish, then we're going to break through that resistance. We're going to get more bulls on as we make a higher high, and off we go. And if it comes back, what happens? Knocks me out and I lose nothing because I've already moved my stop to break even after about a minute or two, which is key. And in this case, moment of truth, and it breaks. Okay, whatever. So that's not a perfect example, but this is a new scalp. So, and then maybe it comes up to a pivot point or a psych level, and I quickly either move my stop or just take profit, depending on how I feel at that particular moment. So maybe only pick up 25 pips or something like that. But if you have 20 opportunities a week to do it, not just in Asia, but through all the sessions, and some of them you break even on and some you make profit on, you know, it adds up. Again, it's not going to make you rich, but it's another part of your repertoire. All right? So Asia is a wonderful session to trade. Asian often moves counter to the European session because the Europeans do the opposite. It has nothing to do with Asia, right? Asia is very suitable for very short-term scalps on the news or at the top of the hour, like I was sharing with you before, or the overnight session, like I do. So I'll catch that. I'll trade the Asian fade, hold them overnight. That's nice too. Japanese yen and other Asian pairs move great. Often because, let's say non-farm payrolls came out on Friday, right? You know, and big news comes out and really moves the market. Asia is already sleeping. It's already Friday night. So they get to read the news in the newspaper, think about it all weekend, and then they get to trade non-farm payrolls on Monday. So sometimes there's delayed reactions because of the time zones. So you can take advantage of that as well. And then Asia has lots of very interesting news scalps that you can do. So I just taught you some spot trading, some swing trading, and some news scalping in this 1 hour. And you can do it all in Asia. So I hope you found a nugget that you can use every single day, maybe even tomorrow. It's really cool. If you watch the clock during Asia, Asia is different from the other sessions because the banks are opening. And I will show you this, the time frame, but banks open, okay? So like all the banks around the world are closed right now. It's the weekend. But 8 a.m. in Auckland, New Zealand, the first set of banks open. And then 8 a.m. in Sydney, Australia, banks open. But also in Tokyo, and also in Seoul, South Korea. And then another hour later, banks open in Hong Kong, Beijing, Taiwan, you know, and then a couple hours later, boom, they start opening up in India. And guess what happens? Over the weekend and overnight, all the normal business transactions that happen around the world, you know, money being moved around, pile up overnight. And as soon as the bank opens, the money is executed going in and going out. So I can tell you, and I do this all the time when I do coach Asia, I'll say, okay, we're about 4 minutes away from volatility. And all of a sudden, you start getting candles, right? And you can count on it. And I'll trade that volatility, you know, let's say for about 18 minutes. And then it fizzles because everything that was going to occur has occurred. And then if I'm just trading on my own, very often I'll make that trade. I'll scalp, let's say 25, 30 pips, but on maybe multiple currency pairs. So maybe I pick up 100 pips very quickly, and then I'll leave. I'll leave for 40 minutes, and then I'll come back, next set of volatility on its way, and I'll watch. All right, about 4 minutes now, and I'll maybe get in a trade and see where it goes. And so I would say 5 minutes before the top of the hour to about 15 minutes after. All right, so like here it'd be like 4:55 to 5:15 p.m. and then walk away. You know, and then you can come back and catch the next one, walk away. Come back, catch the next one, walk away. But there's other things that are unique to Asia that I can't share with you today.